Hey everyone, it's Iggy from the Investing Iguana, and today we're unpacking how the global silicon war between Broadcom and Nvidia has landed right here in Singapore. I want to show how the launch of Broadcom's Thor Ultra chip isn't just a headline for Wall Street tech watchers. It's now directly shaping our SGX portfolios, CPF strategies, and the growth of our own data center landscape. If you're investing in Singapore REITs, following Keppel DC's moves, or wonder what powers the omnipresent cloud behind your everyday life, this is a video you don't want to miss. First, a quick intro for those new to the channel. I'm proud that the Investing Iguana was ranked 8th among Tiger Brokers 2024 Influential Tigers. We've just crossed the 1 million mark for reads and hit 58,000 likes. I've produced over 1,000 videos, racking up more than 600,000 watch hours as of August 2025, with a focus on not only US stocks, but also Singapore, regional, and global trends. This episode is adapted from my latest in-depth Substack deep dive, so check the link in the description for the full breakdown and investing playbook. Here's how we'll flow today. First, we'll set the scene of Broadcom's Thor Ultra versus Nvidia, a dual challenge that's impacting the region's entire infrastructure story. Next, we'll explain why AI networking isn't just about faster chips. It's about local data sovereignty, regulatory compliance, and how MAS rules shape demand. Then, we dig into market dynamics, local growth projections, and what they mean for investors. After that, we'll look at custom silicon's impact on property trusts and DC economics, practical engineering benefits for the local ecosystem, and how competitive positioning could determine whether Singapore stays ahead in AI. Finally, I'll share my personal investment take, plus a short list of SGX names to watch, and close with key lessons for your Singapore strategy. Let's jump straight in. Imagine Broadcom, the US chip giant, making headlines in Silicon Valley by announcing the Thor Ultra just one day after sealing a landmark custom chip deal with OpenAI. For Singapore, this isn't mere global tech news. Thor Ultra is built to connect hundreds of thousands of AI chips at once, enabling smarter, more scalable data center networks from Jurong to Batam and Iskandar. That means local telcos, financial services, and logistics players stand to gain a real edge, especially when these chips help lower costs and raise efficiencies for data-intensive businesses. Now, why does infrastructure matter so much here? In Singapore, we sit as a regional hub with strict MS compliance, high expectations for data privacy, and a strong push for smart nation goals. Our HDB estates are getting predictive maintenance powered by AI. Banks compete on low latency, MAS-compliant trading, and the CPF and SRS portfolios that many of you build rely on stable returns from listed REITs like Keppel and Mapletree Industrial Trust. Underneath all this is the plumbing, the network chips connecting AI clusters, which Thor Ultra directly powers. So next time you're looking at a DC lease-up rate or wondering about REIT dividends, remember, chip innovation in the US is influencing cash flow in Singapore. Let's talk numbers for a moment. Market projections show the AI accelerated chip space could surge to over $283 billion by 2027, with data center networking growing to $155 billion. That's why giants like Nvidia, AMD, and Broadcom matter in the headlines. But locally, integration challenges and cost versus performance matters even more. Think about how Mapletree Industrial Trust is upgrading its DC portfolio, or how tenants negotiate to fit more advanced servers into their racks on Ubi or Woodlands industrial sites. If Thor Ultra lets DCs extract more value per rack, investors in Singapore get potentially higher utilization rates, better rental escalations, and more stable cash flow into CPF and SRS accounts. Networking chips like Thor Ultra have huge strategic importance. When Broadcom exec Ram Valaga describes the network as the backbone of distributed computing, it's not just marketing. For Singapore CIOs and engineers working under regulatory scrutiny, better networking chips mean faster, more reliable clusters. Whether for AI research at NTU or automated risk analytics at DBS. MAS is tightening guidance, so reliability and compatibility are fast becoming winning factors for contracts and regional projects. For all the full charts, checklists, and written playbook, grab this post on Substack, link in description. Now the custom silicon revolution comes in. We've seen Broadcom's AI business explode with 220% revenue growth to $12.2 billion last year, proving the move away from generic chips is real. Hyperscalers are demanding solutions that control costs and meet regional challenges. For Singapore investors, it means property trusts, especially those owning data center assets, can ramp up, lease faster, and bring in more stable income. Earlier ramp-up means earlier distribution to unit holders, so the chip wars overseas can already show up in your account statements. Project economics drive the investment stories further. A purpose-built 1GW or data center can run to you $50 billion, about $68 billion, with legacy Nvidia-type chips making up almost 70% of that. Broadcom's custom chip approach? Potentially more savings, more capacity, and higher asset utilization for Singapore REITs. If a REIT like Keppel DC can fill more racks with advanced hardware, unit holders benefit over the long term. Engineering teams in Singapore aren't left out. Thor Ultra doubles bandwidth from previous models, so biomedical startups using NUS resources and language models built for local dialects can process more data faster. Reference designs from Broadcom shrink time to market, help firms hit SGB compliant sustainability metrics, and win competitive tenders in ASEAN and beyond. As the competitive map unfolds, Nvidia keeps offering an integrated GPU network platform. For big American players, that's a turnkey solution. But for Singapore and ASEAN, it means platform lock-in, less flexibility, often higher total cost. Broadcom's open architecture lets local operators choose hardware, control infrastructure, and stay agile on cost and compliance. That's ideal for government-linked enterprises like Singtel's Nexera Arm or NTU's Innovation Labs, who balance cost and strategic goals. Let's recap with a scenario. As AI moves from text and images to logistics, health, and public safety, key for smart nation, the need for performance and adaptability rises. If energy tariffs shift, data privacy rules update, or land use battles intensify, the ability to tweak, scale, and optimize networks decides which players win. Broadcom's dual play in custom accelerators and advanced networking keeps options open for Singapore's unique constraints, so we're not stuck with one-size-fits-all US solutions. Market opportunity here is real. CEO Hock Tan projects Broadcom's AI infrastructure playing in a $60–90 billion space by 2027. In Singapore and Asia, rapid adoption is already visible. MAS is backing AI initiatives, business trusts are pivoting into green DC investments, and cross-border cable links are driving regional partnerships. That means second-order winners locally, from industrial REITs and fiber optic providers to SGX-listed equipment manufacturers, stand to benefit. If you're building a CPF or SRS-backed portfolio, understand who is exposed to this upgrade cycle and which funds factor it in. So for practical investing, look at SGX-listed names like Keppel DC REIT, Mapletree Industrial Trust, Singtel, with its Nexera DC arm, Venture Corporation, and Capital and Ascendus REIT. Each one gives Singapore-based investors simple, income-generating exposure to the region's AI infrastructure growth. As always, do your own research and check if they fit your long-term strategy. What's my personal take as an investor and analyst? Thor Ultra's launch is a sign that Singapore can position strongly in the next stage of global AI infrastructure. We need to stay nimble, blending income plays with targeted exposure to tech and logistics. Platform risk is real, but smart adaptation and diversification will reward investors who look beyond overseas headlines and focus on homegrown opportunity. So, ask yourself, are you positioning for long-term infrastructure change in your CPF, SRS, and cash portfolios, or chasing the next headline? To finish, let me recap today's core lessons. The Silicon War is unfolding under our feet here in Singapore. Broadcom and Nvidia are changing how data centers and networks fuel the economy. This impacts REITs, property trusts, and industrial plays, and it shapes how we keep our portfolios resilient and future-ready. Subscribe if you found this helpful. Share with fellow investors, and join our Investing Iguana membership drive for daily insights and exclusive playbooks. For more on how regional data centers and interconnect shape earnings, catch my next video, dropping soon. Keep learning, keep investing, and let's keep Singapore at the front of the AI revolution.